So, hi, it's Terry Wells Brown with the Women of Wine Country show. And once again, we are back with you with a very interesting guest. We have Daniel, is it Sosa?
Yes, that's right.
I said it right. Daniel
Yes,
Sosa is joining us, and he is a mortgage lender. Is that correct?
yes, I'm a mortgage broker. Yes.
Mortgage broker, and he's going to talk to us about the forbearance and all of the things that we can look forward to, and then also a program that he and Lance McCann are working on to help some of our essential workers. So welcome to the show, Daniel. Thank you so much for coming on.
Thank you. I appreciate the invite. Thank you very much.
Yeah, so let's just jump right into the mortgage forbearance, because I know that there is a lot of questions and discrepancies, and those of us who lived through 2009 don't want to live through that again.
Yeah.
And I think that there is a big disconnect on what people think. So I know that just a limited amount of research that I did on it, because I lived through 2009 as a contractor and don't want to do that again.
Right.
So what I found out was, and correct me if I'm wrong, because I'm just doing a little bit of research, was that right now the way it looks is the mortgage company is giving you 3 months. Basically, you don't, if you go in and talk to them or sign up or call them or however it's working with your mortgage company, they give you 3 months of no penalties and no reporting negatively on your credit report. But at the end of that 3 months, everything is due, or you could start a foreclosure issue.
Right. Right. And so you are correct. And so this is what the issue is you have a lot of politicians, governors, people with power have made these blanket statements to the American consumer that, kind of, so to speak, don't worry, we're going to tell these banks to help you out. The issue is that many of these banks, they didn't have an initiative in place. We're in an unprecedented time. So many of these banks, they didn't have initiatives in place for something like this. And the other problem we have is that all of these initiatives that are going to happen, all of these policies, they're not going to happen in real time. You're going to have some banks that are more proactive than others, and you're going to have other banks that are quote unquote late to the party. And so every bank is going to be different. So the most important thing that every consumer has to do is they've got to call their lenders. They've got to call, don't hide under the covers, call the lenders and start proactively asking them questions on what the process will be. Because you're exactly right. Some of the lenders, they're going to be proactive and they're going to say, yes, we're going to let you not pay a payment for 90 days and you're not going to have any penalties. And then, like you said, on month 4, they're going to say, okay, now what? How are you going to pay us back? Are you going to, like, for example, if your mortgage was $2,000 a month, now you're going to have to pay $2,500 a month until you pay us back. And then other banks are saying, we're not going to talk to you until you're 90 days behind. Once you're 90 days behind, then we can look about getting a forbearance approval, etc. And those banks that are not as proactive today, that's going to negatively impact your credit. And then you have other people that are like, hey, I'm not going to make my payment, although I can afford it. I'm not going to make my payment because the government's making me feel like this might be free or my credit might not be affected. And so what's going to happen is you're going to also have people that won't make their payment when they could have afforded it. And then 90 days from now, the bank's going to say, oh, you don't have a hardship. Now you owe us all the money plus penalties. And if you don't pay, we're going to start foreclosure. So it's a slippery slope. It really is.
So your number one suggestion then is you need to find out what your bank has in place for the crisis.
Correct, because everybody's different. And then, like I said, some are more proactive than others and some aren't. I have a family member that has been affected economically because of this, and they called their bank. Their bank told them, we don't have a procedure in place. If you're going to stop making your payments, this will affect your credit, but we are going to go through an application process. And if you are approved 90 days from now, if you are approved, we're going to work out a plan on how you're going to pay us back. And unfortunately, we don't know what that plan is. And then at the same token, the same family member, they were able to call their credit card companies, their car loan companies, and those companies were very proactive. And they said, because of what's going on, we're going to postpone your payments for the next 120 days. And so they were very proactive. So at a minimum, she was able to get her car payments and credit cards postponed for 4 months without penalty. So really, the consumer needs to call everybody. Call everybody that you're making your payments to and find out what the policy is.
That's a great suggestion. I didn't even think about calling credit card companies and letting them know what's going on.
Yeah, because a lot of people, they're afraid. They don't know what to do. They're embarrassed. Fear can paralyze people.
Yeah.
The uncertainty can paralyze people. But the more proactive you can be, the better you can be more equipped to make your decision. What are we going to do here? And some people, maybe that means considering, selling their property, because so many homes have equity. So maybe this is something where rather than have your credit be affected negatively, maybe you should take advantage of your equity, sell your property, keep the money, and then wait for something more, wait for something better financially. Or some people, I have clients that even in this market, they work remotely already, or their companies have made the transition and pivoted to working remotely to where now a refinance makes sense. They have equity. They don't want their credit to be negatively affected. And they're like, okay, well, what if I cash out $20,000 or whatever, and that's going to protect me and make my payments for the next 6 months or even a year. And we can do that too. So, at the end of the day, you just have to talk to people. You got to call your lenders or call your creditors and just find out what the options are.
So you talked about refinancing, and that's a really good option for people who have equity in their homes.
Mm-hmm.
Has anything changed for the refinancing apparatus since this has all come about?
Yes, for sure. I mean, that's a great question because times are changing very, very rapidly. I mean, unfortunately, the reality is we've had approximately 10 million people file unemployment in the last 2 weeks. And so the writing is on the wall that many of those 10 million people, they're homeowners. And if they are out of a job or their income is temporarily suspended, then these banks know the writing is on the wall that defaults are going to happen. And so the banks too, they don't want a 2009, just like you said, they don't want that. And so many of these banks and these servicers are saying, we can see that there's going to be late payments coming. So we're going to make the guidelines stricter for certain borrowers. So your borrowers that have FICO scores below a 620, unfortunately, there's not many options today.
Really?
Yes, because basically what statistics show, a borrower with less than a 620 credit score has a propensity to make a late payment on things. And so
Gotcha.
right now, these banks are saying, if we go off past behavior, the best predictor of future behavior is past behavior. So
Mm-hmm.
if a borrower with a FICO score below a 640 statistically is late on accounts, then we don't want to loan them money today. That doesn't mean we're not going to let them loan them money, tomorrow, because 2 weeks ago, I could loan somebody money with a 580 credit score.
Gotcha.
2 weeks later, it's different.
Yeah.
The same thing, what's making banks leery today is a borrower who has no money saved.
Yeah.
And statistically, I mean, there are many buyers that get into a house with less than 3 months worth of payments saved up after they have purchased that home. And so if they lose their job, even for a month, it becomes a domino effect. And so now these banks are basically coming to brokers like myself, and they're saying, if the FICO score is below 640, we're going to temporarily suspend that for that borrower. And now the banks are looking at debt to income ratio. And they're saying, if the debt to income ratio is above 45%, we're not going to do that deal today. Or if you want to take a higher debt ratio, we'll allow it as long as the borrower has 3 months reserves and they've been at their job for 5 years. So they're looking at all of these different stability factors to make them feel more comfortable, because what no one wants to do, myself included, I don't want to give a loan, provide a loan to John Doe borrower and have them be late in 2 months.
Right. Because that doesn't help anybody.
Doesn't help anybody.
Yeah.
And it doesn't help the bank. And so, yes, guidelines are getting more strict. but that doesn't mean that that doesn't mean that we can't help people. You know, at the end of the day, it's all about education. It's all about 100% transparency. There's no time, not that I ever promote sugarcoating, but there's no time to sugarcoat right now. Right
Right.
now, it's like, here's what the reality is. We're going to have to verify your employment 6-7 times throughout this transaction. You're going to have to give me pay stubs the second you receive them, because these banks want to make sure that your hours haven't been cut. They want to make sure you're still working. They want to make sure that you still have a job. And, you know, things are changing where, like, for example, I have a borrower that works for Etsy, a multi-billion-dollar company. He works remote. Etsy's headquarters is in Bronx, New York, which is one of the epicenters for COVID-19. And it was very, very difficult to get a verification of employment because everybody's working remotely. And these banks, they have checks and balances. And so when John Smith from Etsy headquarters calls to verify employment from his home office, the bank saying, I can't cross-verify this phone number is from Etsy. And so you have these delays of like, okay, well, how can we pivot and adjust? How can we make this work? Okay, well, what we were able to do is someone from HR had to email from an Etsy email address to verify employment. And it's one of those things, was this cumbersome for my borrower? Was it frustrating? Did it delay closing the process by about 5 days? Yes, it did. But you have to have the communication and say, look, I know this is a bumpy road, but you got to understand what environment we're in today. This is what's going on, and this is why it's happening. And so when you explain that and you come from transparency, people understand. It, you know, it may not be a fun time, but people understand.
Right. So your first piece of advice is to call your mortgage companies and find out where you're at with your mortgage if you're going to have issues.
Yes, because your next door neighbor may have a bank where forbearance is free and they can not make a payment for 4 months and everything's going to be great and there's no late fees and there's no penalty, and they have that unicorn lender that's just so proactive and great. That doesn't mean it's going to happen for you. That doesn't
I
mean.
think, yeah, and I think that's where a lot of hiccups are, and what actually prompted me to do a little bit of research and start calling some of my friends that are in the industry,
Yeah.
because I had one gal say, oh, everybody can just put their mortgages on and they'll put it at the end of the loan and you're good to go for 3 months. And then another gal said, no, it's 6 months. And I'm like, but we're talking foreclosure times now. So I wanted to know for sure. And
For
that's
sure.
what prompted me to ask. Yeah.
And again, one is not the end all be all. Just because ABC Bank is doing this procedure, that doesn't mean that that's going to be the case with everybody else. And the biggest thing that concerns me is when I am on the phone or when I am taking a Zoom call, or you just have that water cooler conversation with people, there is this misnomer where people really think that I don't have to make my payment, it's going to be forgiven, and my credit's not going to be affected.
Right.
And it's just not the reality. It just isn't.
Not what's happening.
It's just not, you know. And are there going to be people that have that happen? I'm sure, but I really believe that's going to be the minority.
Do you think that because of everything that we went through in 2009, that the government will hand down some sort of uniformed checklist that all of the banks are required to go through, just like they did now they did, unfortunately, they were behind the ball in 2009, 10, 11. But you know, we know so much more now. And there's those of us who lived through it last time, like me, who's like, I'm not losing anything this time. So, do you think that they will be putting out some sort of a parameter for all banks to follow?
You know, I won't be surprised if they do. Where I feel confident that what I think confidently will occur is I think the government at a minimum is going to say, look, we understand that your policies may differ from bank to bank to bank. But what we want uniformly to happen is we do not want you to foreclose on a borrower who succumbed to this crisis. So I think that banks are going to be proactive to not foreclose. But the reality is the borrowers are going to have to owe this money.
Right.
I really don't think it's going to be forgiven. I just don't. And so what the consumer needs to realize is most likely your credit's going to be affected negatively, most likely. You're going to have to pay this money back, whether that means adding it to the end of your loan, whether that means doubling up your payments until you pay it back. There's going to be some type of parameter where you have to pay it back. Now, maybe I think the other reality too is the banks are probably going to waive the late fees, but you're still going to have to owe the money. And so
Right.
that's that slippery slope that people need to realize, because the other concern I have is, let's say John Doe borrower waits 4 months and then it's determined that they're with a bank that says you got to pay us back now, or you have to double your payment and that's your only option. And then the borrower is going to say, I can't do any of those options. Well, let me try to refinance and get some cash out so I can pay them back. Well, by that time, your credit's messed up and now you can't refi. And so it's one of those things where, again, going back to what we talked about, you have to be as proactive as possible now so that you can accurately pivot and go, all right, my credit's good now. My income's good now. Maybe I should refi and cash out so that I can make my payments during this temporary process. Or maybe I should cash out on my 401k, because now there's articles out where the government's they're saying you can withdraw from your 401k without penalty. That's a first time deal. That's never been the case before. So borrowers, as much as we all have proactively prepared to try to put money away for retirement, that could be a viable option too.
Yeah.
Pull out of your 401k. Okay, maybe you're going to have to work a little longer. Maybe you're not going to be able to retire when you wanted to, but here's an opportunity where you can withdraw from your 401k, not pay any penalties, and make your payments like you agreed to all along. So,
Yeah.
but you're not going to know all that stuff if you don't proactively talk to people, make the phone calls, or research it yourself.
That's great advice. Actually, I hadn't thought about the 401k aspect of it.
It's one of those things. I mean, it's like the snow. I don't want to sound dramatic, but the snowball has started to roll downhill, and it's just going to get bigger and bigger and bigger and bigger.
Yeah.
And so if you want that snowball to pivot and go away from you, you got to make those calls. You got to do the research. You got to spend the time to do it, because if you don't do the research and you make decisions without it, you're going to realize you're going to have less and less options.
Right. No, this is all great information that I think will be very helpful to a lot of people. So what I'd like to do is, at the end of this video, I'm going to give you an opportunity to tell people how they can get a hold of you. But right now, let's do the next thing and talk about the program that you and Lance are working on.
Okay, perfect. Yeah, so this is my new mission. I mean, right now there's a lot of people scared. It's kind of the same things we've been talking about. They're scared. They don't know. We're all at home. Their kids aren't going to school for the rest of the year. Teachers are, actively trying to figure out ways to enrich the kids still and to teach them. And there's so many things going on that prior to COVID-19, I was already going to unveil this new mission called the Shining Star Hero Program, where it was all in a mission of giving back. It was all in a mission of showing gratitude for those that serve us, for those that serve the community and the country. And so when I was developing the program, I always had the mindset in mind that I was going to give back to your educators, to your healthcare workers, to your first responders, your dispatch callers, your policemen, your firemen, EMTs, paramedics, and your veterans, your active duty and your veterans. Those were going to be my heroes that I was always going to give back to. And then while I was creating and developing the program, COVID-19 comes abound. And now we have all of these unsung heroes that are working around the clock. They don't have days off, mandatory overtime. They don't have the luxury like you or I, where, we're safe at home right now. And as long as we socially distance ourselves, we are safe from getting sick. we have these other heroes that are going to work because they have to, and they're putting themselves literally on their lives at risk literally every day, going to work, and then putting their families at risk when they come home. And what spawned this idea for me is I have two cousins actually, they're UPS drivers. And I saw a post about 2 weeks ago, maybe, where my cousin posted, it said, I can't stay home because I'm a UPS driver. And, at a glimpse, you could kind of say, is he complaining? Like, man, I can't stay home. I'm a UPS driver. Or is it a badge of honor? And I took it as, this is a badge of honor. He is posting his pride saying, I'm out there for you delivering these products because I'm a UPS driver. And now I'm starting to see people make posts of, I can't stay home because I'm a grocery employee. And so then that spawned my idea of, these people might not run our country, but right now they're making our country run. And
Right.
that, and that's your grocery employee. That's your delivery driver, your Amazon, your FedEx, your DSL. Everybody, everybody's shopping online right now. So all those
Yeah.
delivery drivers are putting themselves at risk with the packages and everything like that. You have your farmers, that we took for granted. I took for granted going to the grocery store and buying carrots, going to the grocery store and getting produce. You don't even think about it. Now we're going to the store and we're all fighting. We're all fighting over the most simplest things. We're out of toilet paper. Who brings us those? The truck drivers. They're driving nonstop. The grocery employees. I have a nephew that works at a warehouse, a supermarket warehouse. I have a brother-in-law that works at a supermarket warehouse. They've literally worked 16 days straight, no time off, mandatory overtime. I mean, they are just the utility workers, the PG&E, the water, all of these people. We would not have running water right now. We flip a switch and the light goes on. We turn the handle, the water comes out. All of these people are putting their lives at risk. So that's what prompted me to create the Shining Star Hero program. And so I went out to Lance and I said, Lance, what do you think? I haven't unveiled this to the community yet, but here's what I want to do. I want to give back. So many of these people are invisible. So many of these people, truck drivers, you're driving down the road going, get out of my way. You're driving too slow.
Yeah.
Whatever. The grocery store employee, you're not thinking of them that way. And so it's like, you know what? This is an opportunity where we can say, I see you. I see what you're doing. And this is our gift back to you. And so what I'm committed to do is I'm going to pay for the appraisal for any hero that decides to do business with me, whether they're purchasing, whether they're refinancing. I'm going to pay for their appraisal up to $500, and I'm going to waive our underwriting fee, which is $1,000. So I'm personally giving every single hero $1,500. And then I asked Lance, hey, Lance, would you be willing to give a credit? I'm not even going to ask you how much. Would you be willing to give a credit to a hero that we can help sell a house, buy a house, whatever? And he's like, yes, I'm in this mission. And so now I'm going to reach out even further, because this really, not only does this help our heroes, I now want to support local, because everybody's talking about supporting local. So now I want gardeners, landscapers, painters, home inspectors, pest inspectors, plumbers, you name it. Restaurants. I mean, I've seen realtors post where they say, okay, today's the day I'm delivering my keys to my new buyers and I'm going to bring a pizza, to help them when they move in. Okay, this is a perfect opportunity to get restaurants on board. Everybody, we need to support local. So now I want to build this army of local vendors that recognize our heroes and the service that they're providing to our families and to our community. And we're going to come back and we're going to say, hey, you work with me. This is what I'm going to do. This is what the realtor is going to do. And, oh, you need landscaping? You're a hero. This landscaper is going to do this for you. You need appliances? This appliance company is going to do this for you because you're our shining star hero. And so I want it to be this mission where we all give back and we give the gift of giving to these heroes.
That's wonderful. I love that program. I think that's amazing.
Yeah,
Good for you guys.
I'm super excited about it because, like I said, it's one of those things where we want to say, we see you, we see
Yeah.
what you're doing, and we appreciate what you're doing. And what's the beauty about it, like I mentioned to Lance the other day, is if I said to you, do you know a police officer? You may know a few. Do you know a doctor? You may not know any. But then if I said, do you know a grocery employee? Do you know a delivery driver? Do you know a truck driver? Do you know
Yeah.
a utility worker? It expands our network to give more to more people. And so that's it. I mean, that's the mission.
Well, it's great that you guys are doing this, and I have a feeling it's going to be well needed too. And I think I interviewed Lance right before this interview, and I did put the link to the Shining Star in on that video, and I will on this one as well.
Okay.
I think it's great, and it will. I mean, as a whole community look at it, it's going to help jumpstart us all getting back in. So when it's time for us to get out and start buying houses again and doing all of the things, that'll be something that it'll get people motivated to do that. My fear is that people are going to be scared and afraid because they're going to hoard their money. So the only way to make sure that the economy jumps right back is for us all to jump back in.
Exactly.
Right?
I saw an article recently where the average purchase puts $69,000 back into the market. And how they came up with that is you have realtors on both sides making a commission. You have the loan officer making a commission. The appraiser gets paid. Escrow gets paid. Title gets paid. Home warranty company gets paid. There's all of these services that happen. And then when the buyer purchases, naturally, what are they doing? They're buying furniture. They're getting a moving company. They're buying whatever they're buying paint.
Having the house painted, having the electrical done.
Carpet, all of this stuff. So it's mind-boggling when you think about every home purchase puts $69,000 back into the economy. And the reality is, we talked about fear. Are there people today that could have bought a home 2 weeks ago and they can't now? Yes, there are, of course. Are there people today where the fear is legitimate that, you know what, I'm going to sit back and I'm going to wait? Yes. But there are so many people where it still makes sense to buy. Every hero that I described to you is not affected by this. They're working. Their income is strong. If anything, they're making more money. There are still some very good deals to be made in this market. Rates are extremely low. And the reality is that if a consumer is thinking, well, now's the opportunity where prices are going to fall, I'm going to wait. Okay, I can understand the logic. But the reality is there's so much government intervention right now,
Yeah.
artificial intervention to keep the rates low. The reality is that when this is done and we are free to go back out, the market is going to rebound very, very fast.
Right.
Prices are going to go up and rates have to go up. They have to. So if you buy, and I don't have the numbers, but if you buy a $300,000 house today and the rate, let's say, is in the low threes, your payment's going to be X. But if you wait for that house to be 250, but now the rate is in the fours, you're going to spend more money overall on the life of the loan. So it still makes sense for the right person. It still makes sense to pursue home buying activity and refinancing in this market.
I agree wholeheartedly.
Yeah.
Well, thank you very much for joining us today. I really appreciate it. And I know it was like last minute and it's a rainy Sunday and you had to throw it together.
No problem.
So I appreciate that.
I appreciate you too. It's nice to meet you.
It was nice to meet you as well. And I'll keep an eye on you and Lance. And if you guys have anything else that comes up, or if I have any other questions, I'd love to have you come back on.
Yeah. I mean, I'm on Facebook. I'm getting more and more active every day. I used to be a teacher. That was my original calling. I taught for 6 years. So I'm really coming from the mindset of educating and giving, as much information out there because there is so much uncertainty. So yeah, you can always find me on Facebook and then, reach out anytime.
So if people listening would like to get a hold of you, what would be the best way for them if they have questions about home loans?
Sure, no problem. So my company name is the Central Valley Mortgage Group. You can call me at 209-800-7906, or you can text me at 209-900-5812.
Awesome.
Okay.
Great.
Thank you very
Well,
much.
thank you very much.
You're welcome.
Have a great day.
You too.